Hello my fellow investors and welcome back to another stock analysis video. Today let's take a look at one of your guys' recommendations again, and this one in the form of Republic International Corporation. Now this one was brought up by Tony Myers, where he pretty much recommended ORI, which is this company. And well guys, unfortunately I will not be able to put this out on the 26th as I'm recording this. I'm gonna have to push this to the 27th, so yeah, sorry about that, but nonetheless you guys will still get this tomorrow on Monday at around 4 p.m. Also, I do have a small announcement to make, and that is that I will try, guys, to get a video out, or at least pre-record a video for Wednesday. Unfortunately, I am moving, and the moving day is on Wednesday, so it's gonna be just hectic. I will probably not be able to make a video that day, or even, you know, that like Thursday even, but I will try to pre-record a few in advance and get it to you guys as soon as possible. Just keep that in mind. If you do not see a video from me, that is the reason why. So with that said, let's get started with this analysis. So let's actually take a look at what they actually do. We got Republic International Corporation, through subsidiaries, engages in the insurance and underwriting and related services business, primarily in the United States and Canada. The company operates through three segments: general insurance, title insurance, and Republic Financial Indemnity Group runoff businesses. Alright guys, so they're pretty much like insurance companies. You can see here they are in the financial sector. So for that, we are going to have to use the book value to per share and tangible book value to see if at the current share price this is looking like a buy. Now, they did have their earnings rather recently as of January 26th. I'm not going to go over them, just here's the quick summary of them. EPS normalized actual came in at 80 cents, which was a beat by 25 cents. EPS GAAP actual $1.73, beat by $1.50. Revenue $2 billion, which is a beat by $37.2 million. So coming down into the calculator, we got the ticker symbol for ORI, market cap of $8 billion with a PE of 11.68 with a current share price of $26.39. This on the 1 year is actually up 9.04%. On the year to date, it should be also up, 9.2%. And the reason why I knew that is because take a look at this 52-week range, $20.03 to $26.72. We are, guys, like at 52-week highs when it comes to this company, unfortunately. But let's see what the book value actually tells us. They do pay out a dividend of 98 cents, which is a yield of 3.78%, a 5-year CAGR of 3.9, a payout ratio of 32.86, 31 consecutive years of dividend payment. Ex-dividend date is actually coming up on the 3rd of March, so good thing that we're looking at this now. Payout date is actually going to be on the 15th of March, and they pay their dividends quarterly. And of course, based off of the current shares outstanding, they pay out almost $300 million in dividends every single year. Now, taking a look at the fundamentals, starting of course with the net income 5 years ago of $370.5 million to today of $686 million. That's an increase of 85.26%. However, I'm not giving this guys a high grade. I'm giving this a 50, mainly because this isn't consistent. Now, 3 years ago, you could see a massive drop from $1 billion 4 years ago to $558.6 million. Again, probably due to COVID. However, you can see now a massive spike from 3 to 2 years ago, and then a pretty sizable collapse from 2 to 1 year ago, i.e. 2022. So that's why, again, I'm giving this a 50%. Looking now at the total revenue, this one looks a lot better though. However, we do see a small drop from 2 to 1 year ago. On the 5 year, it was $6.3 billion to today of $8.1 billion, increase of 29%. You can see a drop from 4 to 3 years ago, a massive jump from 3 to 2 years ago, going from 7.2 billion to 9.34 billion, and then a drop from 9.34 to 8.1 billion dollars. I'm giving this guys a 65%. Actually, you know what? Now I'm actually going to increase this to like 70% because honestly it's not too bad. It's still overall increasing. So I'm going to give it the bare minimum of 70%. Looking now at the shares outstanding, this was actually very interesting because it's not consistently decreasing. However, it is decreasing at least on the 5 year. 5 years ago of 298.2 million shares to today of 294.3 million shares. That's a decrease of 1.31%. And from the previous to the current year, well, it was such a small decrease, guys, that it's essentially 0%. But nonetheless, you can see that, you know, from 5 to 4 years ago, they increased it. Then they brought it down from 4 to 3 years ago, and then they increased it from 3 to 2 years ago, and then from 2 to 1 year ago, they decreased it. So this is all over the place. However, the overall trend is to go down. Therefore, I'm going to give this an 85%. Looking now at the assets minus liabilities, this one's looking very, very good, consistently increasing from 5 to 2 years ago, and then a drop from 2 to 1 year ago. However, though, this drop is actually lower than that of the 3 year ago value, but still higher than the 4 year ago value. Average total assets, it is $23.1 billion. Average liabilities is almost $17 billion. And doing this difference, we get $6.1 billion. I'm giving this, guys, an 80%. Now, with all of that said, guys, I gave the net income a 50%, revenue 70%, shares outstanding 85%, assets minus liabilities 80%. Overall grade of 69%. So we're 1% away. I could see the justification to buy this company. Honestly, my main issue is that net income is just all over the place. But again, 69%, it's not looking too bad. But now let's use book value and tangible book value. Based off of the book value per share, guys, as of today, the current share price should be $20.95. This is an increase of 21% from the prior 5 years of $17.26. Looking now at the tangible book value, this one, some people consider this to be a lot more accurate than the book value because this removes anything that is non-tangible. And as of today, it's actually the same, $20.95. That is an increase of 26%. And within the past 5 years, at least 5 years ago, it was $16.67. And of course, looking at the price divided by these book values, we can see that, well, since they're both the same, guys, you know, they're going to have the exact same ratio. So that would be 1.26 for both the book value and the tangible book value. Now, obviously, this is a lot higher than the current share price of $26.39. However, you know, the 52-week lows was $20. So if you would have bought it at that point, you probably would have been within this range right here. Obviously, the current book value and tangible book value may have been different back then, but nonetheless, in my personal opinion, with a 69% and only 0.26 above what it should be, like when it comes to fair value, honestly, I could see the case for buying this company. And now let's take a look at this dividend, because putting in $5,725, how much does this in annual dividends give us? Well, if we were to do this, guys, this would net us 217 shares, which would be about $212.61. That's actually really, really good for $5,725. And lastly, let's take a look at their options, because, well, let's see if maybe we would like to sell some puts, or if you guys have 100 shares, if you would like to sell a covered call. Now, first thing to note when it comes to this is that they don't have a lot of options over here. For starters, their expiration dates are March, April, July, and October, and that's about it. I can't even go beyond that. So when it comes to liquidity, they're not really that liquid. And looking at the actual options chains, we can see that as of March 17th expiration, we don't have a lot of volume pretty much anywhere. The only volume that we have in regards to the puts would be with a $25 strike, and the volume's only 4, and if you were to sell this, you would essentially get $0, right? The bid is the buyers, and you know they're going for 0 right now. When it comes to the calls, well, there is a little bit more premium here. However, there is no volume at all, so you probably will not get this option to be exercised. Now, looking at the April ones, we actually have a lot more over here for some reason. But the April ones, we can see that we have a lot. Well, actually, there's 0 volume when it comes to any of the puts. And when it comes to the calls, it's still 0 volume. So no matter which one you would choose, you wouldn't get this option executed at all. However, the premiums here are a lot higher. So you can see for a 25 strike, now you're getting a $30. And for a put, you would essentially be getting $15 to $25 for the 29 and 30 strike price. All in all, when it comes to this company, honestly, it does have potential. However, 69%, you know, it's right there, man. If their net income was just slightly better, I think that this would be really, really solid. But overall, it's looking like average, I guess you could say. They just need to fix their net income, though that dividend is looking pretty good. That pretty much is it for this video, everybody. Like if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the YouTube sites. Link in the description below. So with that said, peace out, and I will see you all in the next stock analysis video.